All right. Welcome, everyone. Today, we'll be looking at how to trade inverted head and shoulder pattern, how to trade it effectively, and the concept. Many times when we hear the word chart pattern, many things comes to our mind. A lot of things comes to our mind when we hear the word chart pattern. But actually, every chart pattern is just a form of exhaustion. Then the break of it, the retest of it, give the impulse move. So the pattern in which the exhaustion is formed, that is what differs. Sometimes the exhaustion can form in form of wedge, in form of triangle, flag, head and shoulder pattern, as in it's just exhaustion, but it forms in different way. You get it? And the summary of it is that when we see exhaustion, the next thing we should be waiting for is a breakout from that exhaustion, then an impulse move. Now, one of the chart pattern is inverted head and shoulder pattern. Now, I'm going to show us how we can effectively trade this pattern. Okay. Now, this is the first neckline, head, second head. Now, many a times, some persons call themselves aggressive traders. This is their entry. It's not wise to enter from this point. Yes, when you see the first neckline, you anticipate the head. When you see the head, it's not also wise to enter at this point. I'll tell us why shortly. When the second neckline form, it's not also wise to enter. I'll tell us why. The best place to enter is at the break of this structure and the retest. That's the best place to enter. At the break of this structure and the retest. Now, this is the reason. If you enter here, there's no logical place for you to put your stop loss. There's no logical place. If you enter at this place, there's no logical place for you to put your stop loss. Yes, if you enter here, this is a logical place to put your stop loss. But I'll tell you the reason why you shouldn't enter, even though this is a very nice place to put your stop loss. The reason is this. There's a resistance here at the top of this price, this current price, and there's every tendency that the market may get to this point and continue downward. The possibility is very high because that is the trend. Of course, the market always flow easily when it's with the trend. So that is why it's not advisable. No. You wait for the structure to break and retest. Now, breaking the structure, automatically, the market retesting will find support. If the market finds support here, then it's a clear indication that the trend have changed. Break, retest, a clear indication that the trend has changed. So this is the best place for entry if you are trading inverted head and shoulder pattern. This is your entry. Your stop loss should be a little bit below the neckline. You can target 1:2. 1:2 is fair. Don't be greedy. Don't target 1:6, 1:7. Yes, it's possible, but it's safer to target 1:2. If your accuracy is high, 1:2, you'll be a very profitable trader in the long run if your accuracy is high. And if you always wait for the previous line, the previous low to be broken and retest, your accuracy will be much higher than when you trade because you see engulfing or you see a weak rejection. Okay, now let's look at it in the chart. Similar thing. First neckline, there's no place to put your stop loss because the market can keep on going down. The head, second neckline, the break and the retest. Now, that it broke is not enough for you to start buying because there's what they call fake out. The market can break out, break in again, and continue to the downside. You get it? So that it's broke is not enough reason to start buying. You should wait for exhaustion, price exhaustion. That is retracement. Now, when the price has finished exhausting, then you wait for what? Sign of bullish. Bullish engulfing candle is a good sign that the market want to reverse. That is for inverted head and shoulder pattern. For head and shoulder pattern, it will be bearish because that's the opposite of this pattern. Now, once you see this big engulfing candle, it's a good sign that the market has respected the break of structure. But for my own trading pattern, I'm a very conservative trader. I will only, this bullish candle will not be my entry. I will not enter based on this candle. This is the reason why. If you look very well, you will see resistance, a little resistance from this place. My entry candle will be this hammer because it broke through the resistance and closed above it. This is my entry. Yes, entry from this candle is also good, but because of this trend line, this resistance, vertical resistance, I'll wait for it to be broken for me to be sure for more confirmation. I know many of us didn't see it because you're not looking closely. So I always advise us to look in between candles. Look what is happening in between candles. Don't just trade the market because it's going up or it's going down. Look in between candles so that you can spot little things like this. You can see it. Break of this, enter your stop loss here. You are certain that at least the probability, the possibility that the market is going to respect the structure is high. You get it? Like I said, 1:2 is fine. 1:5, 1:1.5 is also fair. 1:1 is fair. But the one I will not encourage is anything less than 1:1. This should be 1:1.18, which is also nice. Now, some persons will say, yeah, if I've entered from this place, I'll be targeting 1:3, 1:2 point something. Yes, but there's also every tendency that your losing rate will also be high because you are not following structure. So it is better for the target to be low, 1:1, 1:1.5, 1:2, and at least the probability that it's going to hit your take profit is at least 70, 80%, than to risk it from under here, from this neckline, with a mindset of targeting 1:3, 1:4, and you end up losing the trade. Of course, losing trade kills your confidence. That is why it is safer to always wait for the structure to be totally broken, retested, and every other resistance out of the way, every other support out of the way, it gives you confidence. And when you keep trading this way, when you keep having more wins have a way of building up your confidence. Have a way of building up your confidence. And when your confidence has been built up, then you can start increasing your lot size gradually. But you have to build your confidence, and this can come by having good number of winning trade. I always say this, it is better not to be on a trade than to be in a wrong trade. You get it? So this is the best way to trade inverted head and shoulder pattern. Now you can go through the list of video. There are other videos on how to trade flag, how to trade wedge, how to trade all the patterns. Just go through them. And if you trade this pattern this way, your accuracy level will be 70-80%. 70-80%. All right. Thank you very much for your time. We always like to keep it short. We go straight to the point. We try our best to remove the noise. Okay. So if you have any question, let me know in the comment below. If you find today's video helpful, remember to leave a like and feel free to subscribe for tips in future. Feel free to stick around for some of my other videos that you may be interested in. Thanks so much for watching, and see you in the next video.